dollar Swiss franc, and here is the weekly. Okay, so maybe in a 1, 2, 3, 4, fifth wave, fifth is done. A, B, C. We are in a correction basically since 2008. Okay, so here we may have A, B, and within the C pattern, I remember here we looked at possibly 1, 2, 3, 4, and then 5. Although 3 should be the longest, most dynamic wave, but here it doesn't appear so. So this is not the preferred count. Preferred count is that we are in the middle of the third wave, 3 of C, because the third wave is the strongest wave. Okay, so here is the daily, and what we have is basically here 1, 2, and now we're in the third wave right now. Okay. The alternative count is 1, 2, 3, 4, 5. So, okay, I didn't put the 5 there, but this would be a fifth wave, and that would be an extended fifth. So basically, you have a short 1, a longer 3, and an even longer 5. Okay, so that could be one scenario. That's the alternative scenario. The preferred count is always the strongest third wave, but here the strongest wave is the fifth wave in the alternative count. And if we use that count, we see that in this fifth wave we may have a similar count, which is 1, 2. 1, 2, 3, 4, 5. This is an alternative count that I'm entertaining. Either way, doesn't really matter. We're at this topping action. Okay, and the point is, if this is a extended fifth, the market tops off. It should come down to test this support here, 38.2%, and if that breaks, it should test this support here near the 1.1 area. Okay, so let's take a look at the lower time frame, as it appears that at least in this daily time frame we may be topping. So 4-hour time frame here, this is the channel that we have, and finally the market broke this channel. Okay, so in this 4-hour time frame we finally see a break. It's been ranging for a couple weeks. So here we have a break, and we have a test of this previous resistance area now turned support. So it's still not completely done with this completion. There's some confirmation needed. So here we have a possible pullback developing, as we see the market is oversold. But this is a very good sign. You see the market here coming down all the way lower than these previous lows as the market was rallying. So this is a good sign for a bearish outlook, that the market may be ready to reverse, at least in the short term. Now this may not, I'm not saying that this will reverse this whole run up, but there is definitely some very bearish attempt to follow, to developing. Okay, so in the 4-hour time frame we see strong momentum here. Actually, let me go back. I misspoke. This is not in the oversold zone. It's in the bearish zone. This 40 here is the bullish support, which means as the market becomes bullish, the momentum is supported above 40 in the RSI, and we saw here attempt here, the market penetrated just slightly and shot back up, and finally we have this market break below. So in the context of the previous uptrend, this means it's time for reversal. It's ready for a significant correction or consolidation, and the price action actually already reflects consolidation. But this this kind of momentum gives a slightly more bearish bias to this correction, that it should extend lower, maybe to 112.50 first to test this 200 moving average and this 38.2% retracement. When you measure it with these smaller moves, this is a 61.8% retracement. So 112.50 around, that's an error, that could be a target for the current decline. So here is the 1 hour time frame, and we see a bullish divergence. So there is a correction to this breakout. Let me zoom out a little bit. So we have this breakout right here. Okay, and then there's a pullback. I would basically, I would anticipate two swings to this correction. Okay. In any case, this 200 moving average should provide resistance now that the momentum has shifted to being bearish. Okay. So look for, monitor this current pullback, and then if the market tops off and drops lower, it is aiming at 112.50 in the short intermediate term, or rather, in a week or so. Going to the Euro Pound. So yeah, Euro Pound has been in the sideways action since end of 2008. And this correction basically A, B, C. Okay, so let's go to the daily. So we're in the C wave. Okay, and here we may have 1, 2, and we may be in the third wave of the C wave as the market accelerates. So let's take a look at internals. Third wave may be over, may not be over. Actually, it should be stronger. This is wave 1, wave 2, wave 3 should be stronger than wave 1. Okay, and it makes sense that here the market is breaking out of this channel. Wave 3 is the stronger wave. So internals a little is not resolved yet. Here we may have 1, 2, 3, 4, 5 A, B, C, and then start of another first wave. So let's take a look at the 4 hour time frame. Okay, 1, 2. So yes, we may be in the middle of the third wave, as I said. Let me just go back. Okay, so 1, 2, we're in the middle of the third wave, and in the middle of the third wave, we have 1, 2, 3, 4, or 3, 4 ABC, unresolved. Basically, we may be in a wave 5, or this may be the first wave of wave 3 of wave 3. So okay, it's a little so many subwaves here, many internal waves. Okay, anyway, this is the third wave, right? And we're looking for the first wave of the third wave that could have been over. Could have been, I should be writing it here. Let's make it. Okay, so this could be 1 and 2, and then 3. Oh, let's make it. Okay, or we just finished 1 and we're waiting for 2. Okay. All right. Okay, so here, in any case, what we're looking at the action right now down here. This is wave 5, and this channel is an impulse wave, and then we are in correction in a correction mode if we have completed wave 5. So let's see, we have this channel, right? We have this channel coming down, and that broke. Market is bottoming right now, so look for if the market can break above the 200 moving average in the 1 hour time frame. That's a clue that we have completed an impulse wave and should be in some kind of ABC correction. Okay, so euro pound might be at a short intermediate bottom at the moment.